Now, what are liquidations? Liquidations, so in Bitcoin and in cryptocurrency markets, there are mediums and platforms where you can do leverage trading as well. Now, what is leverage trading? I'll explain you in easy words. Leverage means you can borrow, like आप उधार ले सकते हो, you can borrow. Now, what you do in leverage trading? You borrow some money from the exchange. You put that money which you borrowed from the exchange also in your trades. Either you make profit or you make loss. If you make profit, then you keep the profit part and return the borrowed money back to the exchange. If you are at a loss, then whatever your loss will be, that is taken from the money you have in your wallets. I'll give you an example. So usually leverage trading happens in multiples like 2x, 3x, 4x, 5x. There are some platforms who give opportunity to even trade as high as 125x. But again, the higher you will leverage, the higher you will borrow, the more risk you are taking in your trades. How? I'll give you an example. Let's say you bought Ethereum at $2,000. Okay, let's round it off. Let's say you bought Ethereum at $1,000, right? And you want to make a leverage of, let's say, 2x. So what you did, you had $1,000 and you also borrowed $1,000 from the exchange. So now what you're putting in your trades is $2,000. So this is how your trade value or your trade amount became 2x. $1,000 were yours, $1,000 were something you borrowed from the exchange. Now when you place, let's say, a 2x trade, a 2x margin trade, what will happen? Let's say Ethereum's price reaches $1,100, right? Or let's say your Ethereum's profit in percentage was 10%. Now what will happen? If you remember, you had $2,000 to trade, right? Now what happens in this case? How much profit did you make? You made 11. So Ethereum went 1,000 to 1,100. So your token, your trade value went from $2,000 to $2,200. So instead of making a 10% profit, you made 20% profit. Instead of $100 profit, you made $200 of profit. So this is called that leverage trading. So you borrowed money, you put a higher value of trade with the help of that borrowed money, you returned back that borrowed money back to the exchange, and you were left with the profit of 20%. Now, what happens in the case of loss? Now, let's say Ethereum's price went from $1,000 to $900, which was a 10% loss. Now, what will happen in this case? Since there was a 20% profit in 2x leverage, there will also be a 20% loss in 2x leverage. How? Just because Ethereum's price went from $1,000 to $900, your total value of loss was also 200. Why? Because your trade amount also went from $2,000 to $1,800. Now the question comes, who will pay these $200 to the exchanges? Right? Who will pay? Of course, they will be deducted from your amount. Which amount? The $1,000 you had in your wallet. After the positions are closed, now you are left with only $800. So if you see, you also suffered a loss of 20%. Now see what happens in some cases. Let's say Ethereum's price declines by 30%. So this means from $1,000, it will be $700. So your trade amount will go down from $1,000 to $400, right? Because $600 were charged by by the exchange to you because you made them a loss. Now, what is the point to which the exchange can bear losses? You had only $1,000 in your bank account, in your wallet, only $1,000. If Ethereum's price goes from $1,000 to $500, right? Your trade amount will also go from $2,000 to $1,000. That means you are at a loss of $1,000, which is the exact amount, the maximum amount you have in your wallet. If in case, anytime, Ethereum's value goes below $500, you are left with nothing. You have had a complete loss. So in this case, what happens? Your positions are liquidated, are completely liquidated. By liquidated means you opened a position, a market trade. You opened a trade where you could potentially generate a profit with 2x leverage. But just because the loss was so high, the market dropped by 50%, this thing happened. Your position was liquidated. That means it was closed because the exchanges will not bear any losses. हिंदी में आसान भाषा में आप दुगना मुनाफा कमाना चाहते थे, दुगना प्रॉफिट कमाना चाहते थे एक्सचेंज से पैसे बोरो करके, लेकिन एक्सचेंज आपको पैसे देगा इस कंडीशन में कि आप उनका लॉस ना कराओ। इसलिए वो एक लिक्विडेटिंग प्राइस लगा देता है, इसलिए वो एक ऐसी कंडीशन लगा देता है कि जहां आपका टोटल लॉस आपके वॉलेट में जितने पैसे पड़े हैं उससे ज्यादा हुआ, वो सारे के सारे पैसे एक्सचेंज रख लेगा क्योंकि आपने उनका लॉस करा दिया है। यूजुअली क्या होता है कि इन मार्केट्स में कॉल्स दी जाती है, मार्जिन कॉल्स, इनिशियल मार्जिन कॉल, मतलब ऐसे कॉल्स दी जाती हैं। कॉल्स में मतलब बस एक सिंपल एक कंडीशन होती है कि ट्रेडर को कुछ एक्सचेंजेस, कुछ प्लेटफॉर्म्स बता देते हैं कि भाई देखो आपका इतना ज्यादा नुकसान हो गया है, अगर आप अपनी पोजीशन ओपन रखना चाहते हो, अगर आप चाहते हो कि हम जो मार्केट का ट्रेड आपने खोल रखा है उसको हम लिक्विडेट ना करें, तो आप और पैसे डालो। ऑब्वियस सी बात है, क्योंकि आपका $1000 का तो नुकसान हो चुका है। अगर आप उसमें $500 और डालोगे तो ठीक है, एक्सचेंज आपके ट्रेड में थोड़ी और कैपेसिटी दे देगा, राइट? बिकॉज फिर एक्सचेंज लॉस में नहीं रहेगा, वो पोजीशन लिक्विडेट नहीं करेगा। अब द पॉइंट इज वेयर एंड व्हेन एंड वेयर डज this liquidation happens? As I said, liquidation mostly happens in leverage trading. Leverage trading happens in mostly two platforms. One is the futures and one is the margin trading. Margin trading is the basic platform where leverage trading happens and where you're also dealing with the assets directly, right? There are certain dates where when the liquidations of future markets happen. When the future markets liquidation happens, usually the entire market declines. And also usually the future positions are open in either Bitcoin or in Ethereum contracts. Many of the exchanges don't have any other futures other than Bitcoin and Ethereum. Usually only two, only Bitcoin futures and Ethereum futures. Bitcoin futures are mostly famous. They are trading in many of the legalized and licensed exchanges in the world. Futures, no. Now what happens? This is the cascading effect you have to understand, and it is very, very important. Imagine that the market price of Bitcoin is somewhere near $65,000-$66,000. And its trading volume will be near like billions. It will be near like, let's say 8,000, somewhere around, easily around $8 billion, $9 billion, right? If at that time, this thing like liquidation happens, the market will decline barely by, let's say 6-7%. Bitcoin's price fell by, from $68,000, it will barely fell to 64. Is it a bear market? No. Because this was a very basic correction. Now, also understand the psychology of the market. At $68,000, everybody's excited to see Bitcoin's price so high. Everybody is related to see, oh, they are usually mostly making profits. Everybody's happy about the market. Now, at this point of time, when a correction happens, people won't give much importance. They have just seen that the Bitcoin's price touched $68,000-$69,000, and now it is back to like 64, 63. So it can reach back. So people are elated, people are happy, people are excited. Not much impact. Now imagine a thing like this, a liquidation like this happen when the Bitcoin's price is near $38,000. At this time, the volume will also be lower, like somewhere around 3-4 billion, which is half the volume at which it was trading earlier. Now at this point of time, when the liquidation happens, the first cascading effect, Bitcoin's price will also fell or drop deeper. Why will it drop deeper? First, because the market's volume is lower, right? And second, the entire market capitalization of Bitcoin is also lower. So the impact it is going to have because of the liquidation, that will be higher. This was the first cascading effect, right? Which was purely technical, which was only based on the price. Now let's come to the psychology part of it. Bitcoin price, people are seeing Bitcoin's price at $39,000-$40,000. They have seen that, yeah, Bitcoin's price was somewhere near 68. It is already half of its value, near half of its value. Now people are terrified, people are fearful, people are panicking. Because first thing, the Bitcoin's price have dropped deeper, which may be like somewhere around 38,000. If it will drop deeper, it will be a deeper percentage loss, which will be somewhere near, let's say, around 10-12%, or maybe more. And its price fell near $34,000. Just an example. It will fall deeper. Now in this case, people will start to panic more. People will panic sell. Usually the biggest mistake which people do when they are panicking is they sell. And this is the most important cascading effect, right? And right now I just told that the future price is liquidated. Now look at this thing. This is very important. On the margin trading platform, there are people who have positions opened, right? Now Bitcoins fell below 10,000, so below 10% or 12%. Even if a person has placed let's say a trade of at 3x leverage or 4x leverage, let's say, if the market falls by 10%, the value of his portfolio or the value of his trade will be impacted by 40%. There are people who put 10x leverage even. If markets fall by 10%, his portfolio or his trade will be completely swiped out. He will be at a loss. Now it starts from the trades, from the people's trades who have placed a higher leverage, 10x, 9x, 8x. It comes down to 2x. It is a series of liquidations happening from the starting to the very end, from let's say 25x to 2x. Till the point, you see, those liquidations stop happening. Now see the number of things which are at a place or which are dropping Bitcoin's prices together. It starts with future liquidations, then to margin trading liquidations, then the panicked investors, right? And then people like who are just, there to realize their profits. And I told to many of my friends in many of the groups also that in December only I sold like around 50 to 60% of my portfolio. Why? Because a correction like this and then a drop like this was pretty evident. Why? Because Bitcoin was near its all-time high. It has started to show corrections. And now, yes, usually those corrections happen at the end of the year. It should have happened in December. Usually, I mean, what the period says, what the past events say, but it didn't. Usually, so what just happened, it got postponed to January. And it was evident, it was supposed to happen. Now, as I mentioned, there's a lowest point at which these investors realize their profit. You see, this is called capitulation. This is the point when these investors, will stop making profits. The lowest trade will go very down, like to the very bottom. And this is the point when usually the bear markets start correcting. And this capitulation was something I saw it happened yesterday. I'm not giving 100% assurance that the markets will go up again. It might not. It completely might not. Okay, but yes, it is a clear sign. Usually it happens.